Let's welcome in a guest. We've got Gaurav Bissa, derivative analyst with LKP Securities, joining us from Mumbai. Gaurav, thanks so much for being with us at NDTV Profit. The markets seem to be clawing back, but the kind of cut we saw a day earlier and on volumes that were so large. What does that mean? Does it mean that the uptrend seems to have gone now? This is perhaps a sign of a correction, and perhaps higher levels should be used to lighten positions, or is the trend still intact?
Good afternoon. There have been some damage to the uptrend. We have seen 8,700 being a very strong support. Yesterday it fell from those levels and with increased volumes. So yes, there's a damage in the trend, not denying that. I would say 8550 is now the immediate support level. So aggressively shorting at these levels would not make sense. Probably if you get it around 8,600, 8,590, that would mean a decent amount of buying opportunity for the market for targets of 8700, 8720. Again, if 8700 is held, then we can head higher towards 8850 level. So there are multiple resistances. It's not that everything is over for the markets and they will just keep on falling down. 8550 is the most crucial level on the very immediate term.
Right. Gaurav, what I'm trying to understand is that over the last 6 months, ever since February and the budget day, it seemed the trend for the markets completely changed. They would reach a new high, they would consolidate or correct for some time and then again make a new high. So the markets are following this higher high and a higher low pattern. Now this time, after the most recent high, we've not made a new higher high. Does this seem worrisome to you, or do you think this is just part of a retracement and another new high is coming?
This is a part of retracement. So we have had a significant jump from 6,800 levels to around 8,900. So even if there is a retracement, let's say if you talk about retracement, the 31.2% retracement or something like that, then there's a possibility of 300, 400 points that we have already seen. And again, that conjoins with the fact that around 8550 will have the retracement supports coming in. And again, it has bounced from those levels. So that is the reason I'm saying that the larger term trend, if you're talking of a longer term trend, that is still up because we have seen a good amount of base formation at around 7,500 levels, 7,800 levels. And from there on, we have been making higher lows in terms of quarterly numbers or in terms of monthly charts. But yes, on a very short term chart, daily charts, there is a breaking in trend. So for short term, we will be in the range, but in the longer run, we are still in the uptrend.
All right. What do you think are good stocks or sectors to be with? If somebody is not trying to time the market, say somebody entered around the 8,400, 8,500 levels, should they be booking? Should they sit on the sidelines, or should they be looking at buying more? If you think that in the long term the markets are higher, what should they be looking to buy so that from here on they make money?
To be honest, and that's been my experience with my organization as well, that people who have been able to buy 8,400, they did not get the desired quantity that they wanted to buy. The market just went up one side. And others who were waiting on the sidelines, they could not buy a single share, or rather they missed the rally, major part of the rally they had missed. There's a chance that there will be a follow-up buying. If somebody has bought at 8,400, I think it's a time to buy some more shares at around these levels. Do not buy the entire quantity, keep some tranches. As long as it's above 8,550, I think even for a medium term, for 2 or 3 months, the markets are going to be good.
Right. But what worked in the past, will the same thing work? Because we did see a lot of movement in the consumption names on the back of expectations of a good monsoon. Is the same story going to work from here? Would you look at industrials for the recovery? What would you play from here on?
The safer bet would be to get into the stocks that are in the momentum. So PSU banks are still in the momentum, even after the correction that we saw yesterday and some amount of correction today. I would say that from the breakout levels, they are still way ahead. There's a 10% upside from the breakout levels. If you're talking of Canara Bank, or you're talking of PNB, or if you're talking of SBI. So these are in the trend. So stick with the names in the trend. Some of the auto names can see a decent amount of jump. And I would be a little bit bullish on the real estate pack as well, because you've seen significant short positions getting built. They've seen good amount of hammering. So I think the overall trend can change from here. Something like SDL can be bought. India Real Estate a little bit on dips. It's a very lucrative buy at around 87, 86. It's a good buy. DLF, I'm not extremely bullish. Probably on SDL and IPO Real Estate, I'm a little bit more bullish. But even DLF can see a good amount of upside from current levels.
All right, so Gaurav, let's discuss your recommendations thread where you mentioned Indiabulls Real Estate as well as HDIL. Can you give us the exact levels where perhaps an entry would be viable, and what targets should people be watching out for all your suggestions?
HDL, it is good around 78. So in last few minutes only, we have seen a some amount of upside coming in. Otherwise, if you buy it around 78, 78.5, have a stop loss of 75, one can go long for targets of 85. Even if that is crossed, it can go towards 90 also. So there is strong support, very strong support at around 75 levels. And for India Real Estate, as I said, 86, 87 is a very strong buying zone. One can have a stop loss of 83, 84, play for targets of 93 to 95. Among the other names that can be seen jumping would be India Housing Finance. A good amount of buying interest is seen. One can keep a stop loss of 810. Targets of 860 can be seen. Tata Motors DVR is looking good. Again, it's another name to see some amount of upside already. One can buy it around 338, 339, have a stop loss of 334, play for targets of 355 to 360, and the final recommendation would be sell on Hindustan Lever. So among the vulnerable names, I think the FMCG name would see some amount of pressure. So whether it is ITC, whether it is Hindustan Lever, we'll see some pressure in these names. So Hindustan Lever can see 850 levels, have a stop loss of 880, and one can go short.
Right. Gaurav, are there any sectors broadly that you think should not be touched at this point in time? Could they be proved to be far more risky than the others? Anything that you think is a clear avoid?
FMCG for the time being, I think it's in the downtrend. Some of the names have given good breakdown. So I would not be very much interested in FMCG names. IT sector as a whole, I think one should avoid. There are selective names. If TCS is sustaining a 2400 level, so trading buy is possible. But if you're talking of entire sector, I would not be touching IT sector at this point in time. So I would say some of the defensive names are looking beaten down. Same goes for pharma space as well.
All right. Gaurav, the next trigger for the markets is going to be the monetary policy, which is just about 2 trading days away. Now, if somebody had to play for that, you said the PSU bank stocks remain in an uptrend. Would that be the best play? How would you try to trade the, stocks when it comes to the monetary policy?
It is better to stick with the, I would say, interest rate sensitive names. So we have seen some amount of buying interest emerging in, again, the PSU banks, auto names. Some of the auto names are looking good. M&M is looking good. Ramos DVR is looking good. So stick with the names that are one in the momentum, and second, that will be influenced by what the outcome is of the monetary policy. And even if there is a status quo kind of coming in, I don't think there will be significant impact coming in, because we have seen a good amount of knock coming in the markets already. So not saying that there will not be any at all, no momentum at all, but there's a possibility that we will have a very restricted losses. And since these names are in the momentum, even they will see very limited amount of downside. So I think one can stick with these names.
All right. You mentioned Tata Motors, that you like Tata Motors DVR in the auto space. Now, given that the festive season is also around the corner, and this time because of the positive and strong monsoon, do you think two-wheeler counters can also be looked at, given that rural demand is expected to be buoyant, and given the festive season that is around the corner, between four-wheelers and two-wheelers, what would be your preference?
Purely on the data front, I would recommend four-wheelers, because a lot of these names are seeing good amount of momentum. But I think likes of Hero Motor and Bajaj Auto might catch up. They are not showing incremental signs of upside. They can see an upside. We will have the auto numbers from next week, so they might influence them. But overall, I would prefer four-wheelers over two-wheelers.